I am building a house here in this very nice spot, very high. You can watch the whole Dubai from here. Other buildings will come and join it, you see.
Decades ago, when Sheikh Rashid bin Saeed Al Maktoum spoke about his vision for Dubai, people actually laughed.
And as the saying goes, only a foolish man builds a house in the sand.
A fishing village turning into a global city, unthinkable. Yet today, we have the busiest international airport in the world, the tallest tower, artificial island visible from the space. Sheikh Mohammed once said, "We realize what we have achieved is groundbreaking, but we are still at the beginning of the journey. Now, a new chapter is being written, bigger, bolder, and designed for the next generation of global wealth." This is Palm Jebel Ali. The question isn't, is it stunning? That's obvious. The real question is, golden cycle or a beautiful mirage? Before we talk about Palm Jebel Ali, let's answer a bigger question. Why Dubai? The Dubai 2040 master plan now targets a population of 7.8 million, up from approximately 4 million today. That's around doubling in under 2 decades. Dubai's economy is growing at 4.5% annually, with the non-oil sector making up nearly 75% of the GDP. In 2024 alone, we saw AED 761 billion worth of real estate transactions across 226,000 deals. 110,000 of those were new investors, a 55% year-on-year jump. In 2025, the UAE is projected to attract over 9,800 millennials, with many expected to relocate to Dubai. What exactly is Palm Jebel Ali? Palm Jebel Ali is not a sequel to Palm Jumeirah, it's a scale jump. Total land area 140 million square feet, coastline added 110 kilometers, planned villas 2002, master plan density 0.8 floor to area ratio. This is very important to understand. Compare that to Palm Jumeirah, 61 million square feet, 78 kilometers of coastline, 1,745 villas and 1.2 floor to area ratio. That's a bigger canvas, more shoreline per home and lower density profile by design. It means bigger home. Palm Jebel Ali floor plans are roughly around 40% bigger than Palm Jumeirah. Let me break the island down in plain English. The spine, the lush, wellness first, green heart, running tracks, parks, resort style enclaves. The trunk, the social engine, luxury retail, dining, yacht club, nightlife, and lifestyle mall. The crescent, miles of sunset facing beachfront, eco resort, and exclusive yacht marina. The crown, the celebration district, event venues, cultural landmarks, panoramic hospitality. The fronts, ultra luxury villas, living, private beaches, privacy, 16 villas type with seamless indoor-outdoor flow. This comparison matters because land plus coastline plus low density are the ingredients of long-term power, especially when combined with global connectivity and brand scarcity. That's Palm Jebel Ali. Palm Jebel Ali sits neatly inside Dubai's macro blueprint. In the 2040 master plan, Palm Jebel Ali is expected to host around 120,000 residents, roughly 1.5% of the city's future population. 80 plus hotels and resorts are planned with an emphasis on wellness and eco-tourism. The master plan leans into a 20-minute city approach, smart city tech, biophilic design, and strict ecology targets, including blue flag ambitions and measures that support the Jebel Ali Marine Sanctuary. And location, you're close to Expo City, Al Maktoum International Airport, Jebel Ali Port, and the Jebel Ali Marine Sanctuary, all explicitly mapped in the official material. So what does it mean for you? Logistic, tourism, lifestyle, all converging on one asset. So what does it mean for you as an investor? City scale alignment and location gravity always translates to structural demand, not just launch hype. Most importantly, this time Nakheel is launching 5 and 6 bedroom on the most premium plots on the fronts, which was previously dedicated for only 6 and bedroom mansions. Second half of the front, you can imagine a kind of exclusivity and privacy Nakheel is considering in this master plan. Two levers investors often ignore. First is density, a lower floor to area ratio. In Palm Jebel Ali, it's 0.8 versus 1.2 in Palm Jumeirah. It structurally caps future supply on the island, preserving privacy and elevating per unit land value over time. Second is coastline per home. More beachfront property is not just lifestyle, it's a pricing power at resale. Neighborhood logic. The spine and trunk serve the island. The crescent and crown drive tourism tourism and brand value, and the fronts become the ultimate signal purchase. The kind of address that quietly compounds because the global ultra high net worth individual pool keeps growing while truly prime shoreline remains finite. Three icons: low density, long coastline, and policy alignment. When these three align, you usually don't need financial gymnastics. Time and scarcity do the heavy lifting. Here are the non-cosmetic catalysts that matter to the capital. Airport adjacency. Al Maktoum International Airport's growth put global inflows on your doorstep. Expo City gravity, education, R&D, events, tourism, an ecosystem looking for premium coastal residential anchors. Port and marine sanctuary, a rare mix of commerce, conservation, exactly the kind of brand story the next generation of buyers values. Sustainability and well-being thesis, blue flag ambitions, 20-minute cities, smart mobility, thermal comfort strategies. These are not brochure buzzwords, they are absorption drivers for the post-2025 buyer. As an investor, what is it for you? Prime, low density shoreline that's policy aligned and airport proximate tends to price like a rare collectible, not a commodity. Let's be brutally honest, the very first concern is timeline. Mega project take time. Palm Jebel Ali will not be done next quarter. That's a feature. Long development filters buyers and builds brand. Early phases set the price philosophy. Later phases tend to re-rate earlier stock as the story matures. Second concern is the payment plan and resale rules. Why don't top developers like Emaar, Nakheel, Miras push ultra easy 2080 or 3070 with fast flipping payment plan? Because they are curating the community, controlled resale and milestone linked plan, protect secondary stability and preserve exclusivity. It keeps the flip and dump crowd out and align the buyer's pool with the island's brand. Third concern, couldn't this be built cheaper before? Construction, compliance, sustainability and materials are fundamentally more expensive today than 20 years ago. You cannot recreate 2000 era palm economics in 2025. That baseline alone suggests you're not paying bubble pricing for nostalgia. You're buying into new coast reality with a superior master plan. Bottom line for you, if you want quick liquidity and maximum leverage, this is the wrong postcode. This is not for you. If you want signal status real estate with scarcity backed in, that's what this is built for. History doesn't repeat perfectly, but it rhymes. Palm Jumeirah launched with 61 million square feet of a land parcel, 78 kilometers of added coastline, and roughly around 1800 villas at a floor to area ratio of roughly around 1.2, while Palm Jebel Ali comes at 147 million square feet of, that's whopping, that's massive, 110 kilometers of added coastline with roughly around 2002 planned villas at a floor to area ratio of roughly around 0.8. The market already knows how prime shoreline on a branded palm can perform over time. The difference now is bigger scale, lower density, deeper sustainability, and stronger adjacency to the next generation of infrastructure. That's why sophisticated capital is watching this closely. In this part, let's talk whether Palm Jebel Ali is for you or no. This is for you if you value privacy and scarcity over crowd-pleasing amenities. You're liquid and comfortable with milestone-based payment schedules. You think in cycles and compounding, not quarters. You want a global signal address that's aligned with the city's 2033 and 2040 master plan. This is not for you if you want a fast flip driven by easy leverage. Your horizon is under 24 months. You're hunting for Palm Jumeirah 2006 prices in 2025. That era's cost base is already gone. Leave that part. This is not for you. Remember, in the beginning I asked, golden cycle or a beautiful mirage? Here is my honest and brutal take. Palm Jebel Ali is a deliberately scarce, low density, policy aligned shoreline, play with global transport adjacency and a sustainability story buyers can believe in. The numbers: 147 million square feet of land, 110 kilometers of added coastline and 0.8 of a floor to area ratio versus 1.2 in Palm Jumeirah, and 120,000 residents, roughly around 1.5% of future city population. These aren't just marketing strategy or gimmick. they are structure. If that structure matches your strategy, your answer is yes. If you need short-term velocity and high leverage, your answer is no. Either way, now you have enough to decide whether Palm Jebel Ali is for you or no.